Webull stock took a beating on Friday, closing the session down by more than 7%. The stock dropped $1.08 to finish at $13.59. That kind of decline always grabs attention, especially since it was much steeper than the broader market's pullback. While the indexes were down, Webull clearly got hit harder. The big question for investors and traders alike is why, and whether this sell-off represents the end of the bull run or simply a pause in a story that still has plenty of upside. Let's start with the facts. Friday's session was volatile across the board. Markets were digesting lingering concerns about economic growth, inflationary pressures, and central bank policy. After Jerome Powell's dovish remarks at Jackson Hole, the tone had shifted bullish, but by Friday, traders were reassessing. Bond yields remained elevated, and the Nasdaq in particular struggled. In that environment, Fintech names, which are typically more volatile, were bound to feel the pressure. But why did Webull drop more than 7%, when other Fintech and growth stocks fell far less? The first explanation is simple profit-taking. Remember, Webull had been on a tear in recent weeks. Strong second-quarter results, a relaunch of US crypto trading, and expansion into new markets like Australia and Brazil had fueled big rallies. The stock had been trading north of $15 only days earlier. For many traders, Friday's weakness in the broader market provided the excuse to lock in gains. When a stock runs quickly, the first sign of macro turbulence often sparks a wave of selling from short-term holders. The second factor is lingering concern about execution, particularly around crypto. While Webull's integration of Webull Pay into its core US app was received positively, investors know that rolling out crypto trading at scale is not without risk. Regulatory scrutiny remains high, especially in the United States. Any sign of delays, compliance hurdles, or weaker-than-expected adoption could weigh on sentiment. Friday's decline coincided with renewed chatter about regulatory uncertainty in the crypto space, and Webull, given its fresh crypto push, was an easy target for sellers. Third, Webull's heavy association with retail trading makes it inherently more volatile. This is a stock whose investor base overlaps with the same fast-moving, risk-taking crowd that fueled rallies in Robinhood, Coinbase, and other fintech platforms. When sentiment shifts, the moves are exaggerated. Add to that the fact that Webull is still relatively new as a publicly traded company, with less institutional ownership than more established names, and you get a recipe for sharper swings both up and down. But here's the important thing to keep in mind: nothing fundamentally changed about Webull on Friday. The company didn't report bad earnings. It didn't announce a setback. There wasn't a scandal, a management shakeup, or a product delay. Instead, the move was about market psychology. Investors were nervous heading into the weekend, risk appetite cooled, and Webull's high beta nature amplified the sell-off. So how should we interpret this? On the one hand, it's a reminder that Webull is still volatile. The road ahead won't be smooth, and anyone invested in this name needs to be ready for double-digit percentage swings in either direction. On the other hand, the fundamentals remain intact. Let's not forget, Webull just reported revenue up 46% year-over-year, trading-related revenue up 63%, and customer assets at a record $15.9 billion. The company also notched its third consecutive quarter of operating profitability, something many skeptics didn't think possible so soon. User growth also continues to impress. Funded accounts rose 9% to 4.7 million, while registered users hit almost 25 million, up 18% year-over-year. Equity notional volume jumped 58%, and options contracts grew 8%. These aren't the metrics of a company in decline. They're the metrics of a platform scaling successfully, even in a competitive landscape. And then there's crypto. While Friday's fear centered around regulatory uncertainty, the bigger picture is that Webull is leaning into a sector with enormous long-term potential. By integrating crypto trading into its core app, Webull is removing friction and making itself more relevant to a younger generation of investors who expect to be able to move seamlessly between asset classes. Its expansion into Brazil and Australia further underscores this ambition. In Australia alone, Webull users can now access more than 240 cryptocurrencies through Coinbase Prime's infrastructure. That's a huge leap forward in terms of global credibility. For analysts, the outlook remains constructive. Webull has been upgraded to buy by some, with a thesis centered on accelerating revenues, higher deposits, and better monetization per user. The billion-dollar standby equity facility gives the company flexibility to invest in new markets, expand products, and withstand volatility. In other words, The balance sheet and business model are aligned to support growth. From a technical perspective, Friday's close at $13.59 puts the stock right on top of a key support zone. The 1350 to 1370 area is being closely watched by traders. If support holds, this could prove to be the low point of a healthy consolidation. Resistance is sitting near 1550 to $16. A bounce back toward that range would reaffirm bullish momentum. But if support breaks, the stock could drift into the low 13s before finding its footing. Volatility cuts both ways. Investor sentiment remains divided. Some see Friday's drop as the beginning of a larger correction, pointing to execution risks and macro headwinds. Others see it as a buying opportunity, given Webull's fundamentals and growth story. Retail chatter continues to circle around medium-term targets of $20 or higher, while more aggressive bulls even float the idea of $50 down the line. Those numbers may or may not be realistic, but they reflect the level of excitement around Webull's potential. So what's the message heading into next week? It's that Friday's decline was painful but not fatal. It was more about market jitters and profit-taking than about Webull itself. The fundamentals didn't change. The catalysts, crypto relaunch, global expansion, sustained profitability, are still in play. The technical setup suggests we're at an inflection point, and how the stock trades in the next few sessions will be telling. For traders, the key is to watch support around 1350. If it holds, a rebound could develop quickly, especially if the broader market steadies. For long-term investors, the focus should be on whether Webull can sustain its profitability streak and continue growing its user base. If those boxes are checked, the recent volatility may end up being just background noise. The bigger story is that Webull is transitioning from being seen as a speculative app to being recognized as a legitimate, profitable fintech with global ambitions. That evolution doesn't happen in a straight line, but it does create opportunities for those willing to ride out the bumps.